Morning, Mark Soderberg with ADM Investor Services with your ag market outlook for Wednesday, December 4th. Lower trade here overnight across much of the ag space. Corn right now is down 1 to 2 cents. Wheat is 3 to 5 lower. Soybeans are about 5 to 6 lower. And then the products pretty much steady now in the meal, while oil is still down about 25 points. Palm oil overnight was down just less than 1%. Weakness in the bean oil and corn continued to be felt from the news yesterday. The Biden administration would not be offering guidance on the 45Z tax credit for sustainable aviation fuel before leaving office on January 20th. Also hanging in the balance is the $1 per gallon tax credit for bio and renewable diesel production. Later this morning, we'll get an update from the EIA on weekly ethanol production. Expected to back off a little bit from last week's all-time record high of 329 million gallons. Corn usage continues to run well above the pace needed to reach the USDA usage forecast. I do look for about a 25 to 50 million bushel increase from the USDA in their WASI report next Tuesday. Weekly export sales tomorrow, and Stats Canada out as well. Very little change expected from Stats Canada on wheat production, holding near 34.3 million metric tons. Look for a slightly lower canola production, down to 18.5 is the average trade guess, down from 19 in August. Also, yesterday, the USDA did report updated projections on U.S. farm sector. Total income did rise $700 million to $140.7 million. However, that's still down 4% from a year ago, and that was led by increases in the livestock sector. South American weather does remain very favorable, looking out to about the middle part of December with a good mix of rain and sunshine for much of the key growing areas. March corn did slip down back below its 50-day moving average overnight. Next support is at 427.5. That's a 100-day moving average. Overall remains stuck, however, in a 420-450 range. Big crops, however, big demand as well. Beans still stuck in a sideways trading pattern, $9.75 to $10 for that spot January contract. We're right at about the midpoint right now. Unless we do see a change in South American weather soon, I think the path of least resistance remains to the downside, and would expect a retest of the August low at 935 while trying to discourage soybean acres here next spring. Inside trade overnight for meal, look for a retest of that 280 level. Inside trade for Jan oil as well overnight. U.S. prices do remain very competitive in the global vegetable oil market. Look for a big boost in bean oil exports in next week's WASI report, as commitments for the entire marketing have already surpassed the forecast for the entire marketing year. Look for oil to gain on meal from its current 42% of product value. And wheat prices overnight just continue to trudge along near their recent lows. In fact, we did establish new contract lows in Chicago, improved conditions here in the U.S., along with ongoing harvest in the southern hemisphere is providing the pressure. While tensions in the Black Sea do remain elevated, so far it has not impacted the region's ability to ship grain. And wire services this morning are reporting some damage to wheat harvest in Australia with some heavy rains here in the southeast recently. So we'll see if that develops any traction and can give the market here any bit of a lift. So thank you very much for listening, everyone. I hope you have a wonderful day.